Concerns are not easing up for Apple. China's contribution to Apple's total revenue just hit its lowest point in nearly 3 years. On top of that, sales of the new iPhone don't seem to be off to a raging start either. But our tech editor Dan Howley says maybe, just maybe, services could be the savior the company needs. He joins us now. So Dan, explain. Services, they never sound quite as exciting as new product launches, but I'm curious here.
Yeah, they're not as hot to trot, I guess, as something like a new iPhone or a new Mac, but they do add a lot to what the company has to offer. So just quickly, let's go over what happened in the quarter. Obviously, iPhone sales met expectations, beat them just a hair, not exactly, blowing people away. We also had issues with the iMac as well as Mac, excuse me, as well as the wearables and iPad businesses. But services really did knock it out of the park here. They had 22.3 billion in revenue versus 21.36 billion. That's up from 19.9 billion last year. And that's really the comparison that I think a lot of people are looking at is the year over year when it comes to the Mac, obviously down. When it comes to iPad, obviously down. When it comes to wearables, down. And so that's really where I think most people are concerned when they're, talking about the revenue being lower than they had hoped. This whole year of 4 quarters of declines for Apple in general, starting with Q1. But services has been a standout, and they continue to grow that. Now they're going to increase the price of Apple TV Plus. We'll see what that means for whether or not there's going to be more churn or not. They also are expected to have some big numbers, perhaps from Killers of the Flower Moon. That's something that is an Apple production, obviously, with Martin Scorsese and Leonardo DiCaprio. And then, moving past that, there's a few other kind of bright spots for Apple as well. The Mac, for instance, in Q1, Apple CFO Luca Maestri saying that the Mac should see an uptick going forward, and that's because of the new M3 chips in the MacBook Pro and iMac that are coming to users now. But there's still going to be problems with the iMac wearables, iPad and wearables divisions, just because they say of timing. There's a few other bright spots for the company, and I think those are worth pointing out, and that includes India. During the call, Tim Cook and Luca pointed out India as a big bright spot. They continue to invest in that region, not only as a means for manufacturing outside of China, but as a location for sales. They opened their 2 new stores, their first, I might add, in India this year in Mumbai and New Delhi. And according to Counterpoint Research, sales there jumped 2% year over year in India. Tim Cook basically pointing out that there's a growing middle class there. He didn't want to go into describing the kind of similarities or differences between China a decade ago and India now, but clearly they're trying to look more into India as a place for growth, not to mention places like Brazil and Vietnam as well. But India, with its massive population, could prove to be a big bet and win for Apple in the long run. I think the main things to look at are, obviously, people are concerned about iPhone sales. They weren't as terrible as anticipated. You could read into it, and some analysts are reading into the issue with China sales being down as being a result of the Mac and iPad and wearables services businesses being down. And so those really could be what's going on here rather than the iPhone itself. And market share appears to be, at least according to analysts so far, in line or not declining compared to Huawei. So overall, there are concerns, but it seems as though there's more, green shoots than were initially anticipated going into these earnings.
Indeed. Apple still with a considerable moat versus some of its competitors here, and still
our
top trending ticker so far this morning. Yes. Our top trending ticker also on Yahoo Finance right now. Appreciate you so much. Thank you, Dan. Have a great weekend.